prolong it from collapsing? Can they use a central bank digital currency? We already have central bank digital currencies. It's called the dollar, right? It's a central bank currency and it's digital, right? Who cares if it's on a blockchain or not? What's the difference? Everybody goes back to like Fight Club, $0, and we're just going to give you a spontaneous random amount of dollars and everyone can just, if you were poor and we decide to give you $1 trillion, you're rich. But if you had, if you're a billionaire in dollars and now we decide to give you only a few hundred, now you're poor. Oh, no, that's not going to work. That's insane. So do we want that? No. But would it stop the collapse? No, it won't. Nothing will stop the collapse.
In an explosive revelation that's sending shockwaves through the financial world, Rafi Farber unveils the precarious edge on which our global monetary system teeters, with gold and silver as the unlikely heroes poised to save us from the brink of disaster. Farber, a visionary analyst and the brains behind the influential The Endgame Investor newsletter, cast a revealing light on the hidden fissures fracturing the foundations of our economy, declaring gold's meteoric rise not just a trend, but a dire warning of the chaos lurking ahead. Hit the like button, subscribe to the channel, and check our pinned comment. Enjoy the video.
Student of history, I know what silver is, and I believe, and I don't, it sounds like an article of religious faith, but it's an article of logic, right? I believe in the regression theorem or the regression principle of Mises, where the point is that all prices have to move back into the past or else there's no such thing as prices. Like what I just said before of, well, can they have a reset where they just give people a random amount of central bank digital dollars or Fed coins or whatever, and then expect everyone to behave? No, they can't, because prices only make sense if they're extended back into the past, into yesterday, into 10 years ago, into 100 years ago, into 1,000 years ago, into whenever civilization started. Right. And money is literally the most liquid commodity, and the most liquid commodity for the public has always been silver, and it still is. Right. The only reason it seems illiquid now is because we use gold derivatives. There's no need for silver if you have a derivative that can divide gold into any amount, into any Satoshi amount. Let's talk about the Bitcoin coinage terminology here. It's really popular now. So a Satoshi of silver can be accomplished by a penny or, any digital thing that you want. So there's no need for the actual physical material now. So it looks illiquid. But when the gold derivative is no longer functioning, what are you going to divide gold with to make a retail purchase of groceries at a store? Like, what are you going to use? A gold coin? You can't do that, because at that point, the entire supermarket might be worth a gold coin. So what are you going to do? Like, here's a gold coin, give me your entire supermarket or 2 aisles of food or whatever it's going to be. You're going to need the material, right? If you look at what happened in the 1970s, which is where I think we are. I think we're in 1978. You can quote me on that, but I might be wrong. And I think we're in 1978. So from 1974 to 1978, silver made a high of whatever. I think it was like $6.50 or whatever it was, 1974 or early 1975. And then until late 1978, nothing was happening. Right? And gold was heading higher, new nominal highs every now and then, going up and down, new nominal high, and then a scary jerk down, new nominal high. That's what gold was doing. Silver was doing nothing. So what do you think the silver bugs were saying back then? Oh, silver is a manipulated market and it's not money. But it is, because you have to go back into the past. And before we were on a gold standard, we were on a silver standard. They were saying the same thing in the 1970s. And then all of a sudden in early 1979, silver started to move very, very fast. And what does that mean? It means the public is finally aware that something is going on and that they need to protect themselves, right? And it's always silver, because that is the money that all prices are based on. And we got off the silver standard in 1873. We moved silver to gold in 1873 as a first step towards centralizing the monetary system. It happened all the way back then, 151 years ago. I understand the sentiment. I understand that silver, the monetary silver markets, is a manipulated market. It's been a manipulated market since 1873. Nothing new there. But it's not going to remain that way. The only question is when. That's always the question. And I think it's not far. It's a month, maybe a year. If we're in 1978, 1979 is the year.
In today's market recap, silver price forecast facing downward pressure under 2480, time to sell. Silver's market dynamics have shown vulnerability with the commodities price at 2455, reflecting a cautious stance from investors. Let's take a look at the impact of recent U.S. economic data. Unemployment claims remained stable at 210,000, suggesting labor market resilience. Philly Fed manufacturing index turned positive at 3.2 against an expected 2.6, hinting at manufacturing sector health. Flash PMIs for manufacturing and services outperformed forecasts with readings of 52.5 and 51.7 respectively, indicating economic robustness. Now we'll show you more clips, but first hit the like button, subscribe to the channel, and check our pinned comment. Enjoy the video.
There is an inflection point. And when do you reach that inflection point? When the amount of interest you have to pay on reserves at the central bank is so great that the interest that you pay leaks into the monetary system itself. And then it has to circulate. So the reason that a central bank would pay interest on reserves is because it's trying to stop the money from getting out into the monetary system and control the money supply. Right. So they pay higher and higher interest, which is why when you see in a hyperinflationary economy, you see interest rates start to go crazy, like 20, 30, 40, 50, 60, 70%. Right? They're trying to keep the money from circulating, but the interest that they're paying is leaking out anyway. So in Argentina, the situation is insane because the amount of liabilities, central bank liabilities that are earning interest at the Central Bank of Argentina, he said, is 3 times the monetary base, 3 times the entire monetary base. So this money has to get out somehow, and it keeps like pooping out, you could say. So, for lack of a better word. And is that what's happening in the United States? Well, we're getting there because this inflection point in the U.S. happened, I believe it was January 1977, when you started seeing interest rates going higher and higher and higher. And at the same time, the consumer price inflation rate moving higher and higher and higher anyway. That was 1977 to 1980, right? And then the Fed got control of the situation, didn't know it at the time, but it did. So we're already there. The Fed has moved interest rates from 0 to about 5.4 on the short term, and consumer price inflation is heading higher anyway. So what are they going to do? They're going to raise interest rates, and it's going to make them lose even more money, because he was talking about how the Central Bank of Argentina works. It's crazy. So let's say the government of Argentina needs money for public spending on whatever. So they give the central bank an IOU, and then the central bank buys it, can't sell it because it has no market value, and then they hand over pesos to the government. So the central bank is filled with IOUs that are worth nothing, and the money circulates. So money circulates anyway, and those are losses on the central bank balance sheet. And the Fed has those losses too. It's just not as much yet. It's like 160 billion now. But the higher they raise interest rates, the more those losses are going to be. And what do they call those losses? Well, they call them deferred assets. Like, what do you mean I'm broke? I have a whole bunch of deferred assets. Well, yeah, bums have deferred assets too. They're called being a bum and not paying your bills. A bill that you didn't pay is a deferred asset. So it's a bum. I had 2 disagreements with him. The first one was that he said that he doesn't think that the hyperinflationary situation in let's say in Argentina or Lebanon or Egypt, what's going on in Egypt now. If you haven't known, Egypt is in hyperinflation too now. I think it started on March 3rd or 4th, something like that. He said that because this hyperinflation has been drawn out so long in places like Argentina, then all the more so, kal v'chomer, it's going to take even more time for the dollar itself to hyperinflate. But then I looked into the reasoning, and it didn't make sense, because the way I see it, what is the mechanism that is drawing out the hyperinflations in Argentina? Why is it lasting so long? Why is it last 10 years where you have 20, 30, 40% inflation every year, and it's just never ending, and it just kills people, instead of just being like a rip the Band-Aid off, the money's dead, and that's it, right? Why not? Because when when prices start to rise when prices start to rise in pesos terms, what do people do? They buy what they need, and then they take whatever savings they have left and they buy US dollars. So it's a flight to US dollars. And where do they get those dollars? On the black market from the US in some line of drug dealers and laundering and whatever. So they chase after US dollars, and that itself means that the inflation that would have been in the States is now in Argentina, sharing the burden of that dollar inflation. And so, yeah, the dollar is better for them than the peso, but that's the mechanism that prolongs the hyperinflation, because they still have a functioning currency they can sort of use, right? And then it just prolongs the inevitable. So then, what happens when the dollar itself hyperinflates? Because in the home country, in domestic market in the U.S., food prices are going crazy. Well, what happens is the exact opposite, right? The Americans don't have any other currency to latch onto. It doesn't exist because the dollar is the base of it all. So then what happens, that all the inflation that was exported didn't disappear. It still exists in the central bank balance sheets of all these other countries, along the black markets of all these drug dealers or whatever that sell US dollars in the black market. They all get rid of them, and then they send them back to America. And then once that happens, you have like very fast hyperinflation in the dollar. And then it's the hyperinflation in the whole world. So that's why the hyperinflation of the dollar is going to be that much quicker, and it's not going to be drawn out like it is in third world countries, because there's no other currency to rely on. The other disagreement that I had with him, it just remembered, was he believes that if Milei, you asked about Javier Milei, his point, and I believed it at the time, but I don't think he's right about this either, and I'm not sure about this. It's not like this is my position, but I think this is right. That he said that if Javier Milei just like rips the Band-Aid off, destroys the entire monetary system, allows hyperinflation to just like whoop through the roof, then he risks, essentially he's saying he risks anarchy and a loss of law and order completely, and then he might get thrown out of the country or killed or lynched or something, and then a communist dictator could come into his place. And I said, okay, well, that's plausible. Before I take a position on that, let me think about it. And now I think he's wrong. Because we just said they're hoarding US dollars, right? There's still gold and silver there. So if there's no more peso, then people use the dollar as the circulating currency. And then it's not that they get off the pyramid, but they do step down it, one or two steps, and it becomes a little bit safer. And from there, they can start accumulating gold if they're smart, or silver, or both, right? Argentina, land of silver, do it. So I think Rothbard was right. You gotta, if you're a libertarian, he used this analogy, like if there was a button, if you're a real libertarian, if there's a button that you could just like push forever and it just makes the government smaller and smaller and smaller, you'd blister your thumb, you'd bleed your fingers pushing that button, not even worrying about the consequences. Because if you don't, because this system is going to implode, explode, go supernova anyway. You may as well do it now. Because the farther it goes, the worse the explosion is going to be, and you've got to have logic, and you've got to have faith. You've got to like not twist in a bad sense, but weave or braid your faith around your logic in a strong rope, and then trust that it will pull you out of a crisis.
What do you think of Rafi Farber's take? Are silver coins the way to go in a doom and gloom scenario? Post in the comments section down below how you're preparing for this type of event. Share this video with a gold bug, and check this video right here because it's a perfect fit for you. I see you on the other side.